Alright, so you've just clicked on this video that I'm confident will change your life for the better. By following a simple 4-step process, this credit card can affect whether you sit in the back of the plane in cattle class, cramped and uncomfortable, to sitting in the front of the plane or completely for free in business class being served food and drinks. This video is going to be completely free and is made up of my near decade's worth of experience learning this process, doing it, and still practicing what I'll be talking about in this video to this very day. By the end of this video, you're going to know everything that you need to know about this process, which is otherwise known as credit card churning, hacking, or point hacking. So what is credit card churning? Well, put simply, it's a process where someone uses a credit card to take advantage of sign-up bonuses to accumulate as many frequent flyer points and other reward points as possible. Now, credit card companies will always offer large sign-up bonuses in order to entice new customers to sign up to their cards. Now, you might be wondering, what's in it for these companies? Are they just doing it out of the goodness of their own hearts? Well, not exactly. What these credit card companies are hoping will happen is that you'll sign up for these cards, overspend with your new credit card, and then not pay off the balance in full every single month. And as a result, will make money off the interest that they'll charge you. Credit card churning is a process that attempts to avoid this scenario happening, and instead to collect points and profit from the value of the sign-up bonus. You can essentially think of it as a way of using credit cards to actually make you money. The process follows a very simple 4-step process. First, you research which card to sign up for. Next, you apply for the card, and then you make the minimum spend required to receive your sign-up bonus. And then once you receive it, you cancel the card. Once you've gone through each of these steps, it's essentially a process that can be rinsed and repeated. We'll go over each of these steps in detail, and at the end, I'll also talk through some frequently asked questions that I always receive, like how this impacts your credit score. So make sure you stick around to the end to find out the answer. So the first step is obviously going to be choosing the credit card that you're going to be signing up. But with so many out there on the market, which one do you choose? And don't worry, I'll share with you a list later of my favorite credit cards to sign up for. Now, whenever I'm deciding which credit card to sign up for next, there's always 4 factors that I take into consideration. First and foremost, probably the most important factor is the actual rewards and benefits. Now, benefits can be split into 2 categories. Firstly, the sign-up bonus that you'll receive as a new customer, and then extra benefits that come along with the card itself. What type of sign-up bonus you receive will depend on the credit card program. Sometimes it's frequent flyer points like Qantas or Velocity, or other times it's bank-specific membership points which can then be redeemed for flights, hotels, and gift cards. And other times it's just cashback directly into your pocket. Other benefits that come along with the card can include things like lounge passes at the airport, complimentary insurances, and reduced annual fees. I always recommend to look through what each card offers and decide what's important to you and your goals. If you're looking to travel overseas next year, then you might want to focus on a credit card that rewards you with frequent flyer points. If you're someone who doesn't like to travel, then perhaps just focus on credit cards that give you cash back or gift cards that you can then redeem when you do your next grocery shop. When going through the benefits, I also recommend to try to determine the dollar value that you'll be receiving from this card. And this will become extremely important when we talk about the next factor that we should be considering. Now, sometimes the dollar value is straightforward to calculate, but other times it might be a little bit harder. For example, the ANZ Frequent Flyer Black Card has a sign-up bonus of 90,000 Qantas points plus $200 cash back. Now, the $200 cash back is obviously straightforward to value, but how do we know how much those Qantas points are worth? Now, with frequent flyer points, there are multiple ways that you can use your points. So to give you a rough estimate of what each frequent flyer point is worth, based on what you redeem, here's a rough breakdown. By far, the worst redemption value is going to be redeeming your points for gift cards or purchasing products at just 50 cents per point. Booking hotel rooms usually gives you around 80 cents in value, whilst booking reward flights will vary between 1.5 cents when booking economy flights all the way up to 5 cents when booking first class flights. So those 90,000 Qantas coins could be worth as little as $450 or as much as $4,500. Now I like to be a little bit more conservative when valuing my frequent flyer points, so I typically value it at 1.5 cents per point. Because whilst it can be worth a lot more, it's a lot harder to find business class reward seats, let alone first class reward seats. So in total, when we add in the $200 cashback offer, the total value that we receive from the ANZ frequent flyer black card is approximately $1,550. The second factor to consider is the annual fee of the credit card. Every credit card that offers any type of rewards will typically have an annual fee that will need to be paid. And generally speaking, the higher the credit card sign-up bonus, the greater the annual fee. The ANZ Black Card, for example, has an annual fee of $425, which can seem quite high if we look at that in isolation. But when we look at how much value we'd be receiving from the sign-up bonus, you still end up ahead over $1,000. The third factor to consider is the minimum spend required to receive the sign-up bonus. Every credit card has a minimum spend amount that you'll need to achieve, usually within 90 days from activating your card. Ideally, we want the minimum spend to be as low as possible. This way we can meet that minimum spend easily within the 3 months or quicker. Remember, the goal is to rinse and repeat with credit card churning, so the quicker, the better. My word of advice when it comes to credit card churning is to not spend on things that you don't need just to meet the minimum spend criteria. This is the trap that banks want you to fall into, and this will actually negate the value that you receive from that sign-up bonus. Later on in the video, I'll share with you some tips that I've picked up along the way that make meeting your spend criteria really easy. The last factor to consider is the waiting period. Nearly all banking institutions will have a policy where you can only receive the credit card sign-up bonus if you haven't held a similar card in the previous 12 months. These policies can change between banks, so it's always important to read the terms and conditions and product disclosure statements. A lot of banks, whilst they operate under different names, fall under the same parent company. For example, with the St. George Platinum Card, the policy states that if you're an existing customer who's held credit cards with St. George, Bank of Melbourne, or Bank of South Australia, you aren't eligible. Now I know sifting through all of this information can be a lot of work, so here's a list of my favorite cards to sign up for, which in my opinion are good options. I've separated them all out based on the different types of sign-up bonuses that you might be interested in, so there should be something for everyone. Now it's important to note that sign-up offers from credit card companies change all the time. So in order to stay up to date with the latest credit card deals and offers, I personally like using comparison sites like rewards.com, which summarizes all the points that we just went through. Alternatively, you can use sites like finder.com or pointshack.com, or just watch some of the videos that I post regularly. Alternatively, you can also sign up to my free weekly newsletter where I share the latest credit card updates and offers to my readers. The next step in the process is to actually apply for the credit card. Now, the application process is pretty straightforward and usually takes around 10 minutes. You'll need some form of identification to verify your identity online, which can come in the form of your driver's license and your Medicare card, and proof of income documents as well, like your pay slips. If everything is fine, you'll usually be pre-approved instantly, with final approval coming between 1 to 5 business days. After that, the actual credit card usually arrives in the mail within 5 business days. The third step is to actually begin using your credit card to meet the spend criteria. Remember, I aim to meet my minimum spend criteria as quickly as possible. If you can reach it within the first month of activating your card with just your usual spending habits, then great. But this isn't always achievable, as more premium credit cards will typically have higher spend criteria attached to them and can be as high as $6,000 or more. Now, $6,000 is a lot of money, especially if you're single and trying to be frugal and not spend on unnecessary things. Now, aside from doing the obvious and paying for everything using your credit card, here are 3 tips that I've picked up along the way that help me meet my spend criteria. And the last one is my favorite. Pay for your family's bills. Whenever my family have any bills due, like their quarterly water bills, electricity bills, I always offer to pay for them. Now, obviously, my family members will always pay me back via bank transfer, but by doing this method, you can immediately slash off several $100s off your minimum spend criteria. For example, my partner just recently paid off her mother's annual home insurance bill, which was over $1,000. The great thing about these large quarterly bills is that most of the time, I've also found that they don't actually charge any additional fees to pay them using a credit card as well. Now, unfortunately, sometimes not all bills and payments always accept credit card as a form of payment. On top of this, credit card companies often don't count specific payments toward your minimum spend criteria. These typically will include payments to the ATO and BPay payments. However, you can get around this by using my second tip, which is to leverage a third-party payment solution. These are payment platforms like Snip or RentPay, which allows you to make payments for bills that typically don't accept credit cards as a form of payment, or that might not typically be counted towards your minimum spend criteria. Using these services essentially still allows you to use your credit card and have that payment count towards your minimum spend criteria. However, it is important to note that a lot of these third-party payment platforms will typically have added fees on top, so you'll need to weigh up in your own situation whether or not it's worth it to pay those additional fees. If it's the difference between you actually meeting your spend criteria, then I think it definitely might be worth considering. And lastly, my personal favorite is buying gift cards. This is the method that I always use to meet my spend criteria. Essentially, the strategy is to pre-purchase gift cards at places where you know you'll be shopping in the future. For example, you can pre-purchase gift cards to use at Coles and Woolworths. You're going to be buying groceries in the future anyway, so it's not like you're spending money on something that you otherwise wouldn't. These gift cards can even be purchased at a slight discount through sites like Shopback, Cash Rewards, and Macquarie Marketplace. Alternatively, another great method is to actually buy vanilla, Visa, or MasterCard gift cards from Woolworths or Coles when they're running promotions. During these promotional periods, you can earn bonus everyday reward points or flyby points. These points can then be redeemed as everyday or flyby dollars and used to offset your next grocery shop, or actually be transferred to Velocity or the Qantas frequent flyer program at a rate of 2-to-1. For example, assuming Woolworths or Coles is running a promotion for 10x points per dollar spent on vanilla gift cards, by purchasing a $500 gift card, you would earn 5,000 everyday reward points or flyby points. This is worth $25 to spend in-store at Coles or Woolworths, or can be transferred for 2,500 Qantas or Velocity points. Now remember what we talked about before earlier in the video. Each Qantas point is worth approximately at least 1.5 cents per point, which gives you an approximate value of $37.50. Now, in order to charge the card, there is a $7 loading fee that you'll need to pay, but regardless, whether or not you choose to use those points to offset your next shop, or transfer them across to a frequent flyer program, you're always going to end up ahead. A good site to check to know when these promotions are running are freepoints.com.au. These preloaded gift cards essentially act as debit cards, so you can use them anywhere you can use a debit card. I personally use these cards to make my tax payments towards the ATO. The final step in the process is to receive your sign-up bonus and then cancel your card. Once you've met the minimum spend criteria, it can take between 10 to 15 business days for those bonus points to land in your account. Once you've received your bonus points, then go ahead and make sure you pay off your credit card in full, making sure that there's no remaining balance. And then call up your bank over the phone and then request to cancel the card. At the same time, whilst you're on the phone, I always ask for a pro rata refund on my annual fee. Since I've only used the credit card for 2 to 3 months, and the annual fee is meant to cover the full year, I try and make a case to get a pro rata refund. This method isn't always guaranteed to work, as a lot of the banks are now getting stricter on refunds. But here's an example of me getting a full refund on my ANZ frequent flyer black card of $375. If you are successful in getting a refund, then you'll typically receive a check or a bank deposit in your nominated bank account, which may take up to 2 weeks to arrive or be processed. Once you've successfully cancelled your card, then you've basically completed the process, and now you can go back to step 1 and start the process all over again. And that's basically the credit card churning process in a nutshell. All right, so next, let's go into some frequently asked questions that I always receive whenever I talk about this topic. Does opening and closing too many credit cards hurt your credit score? I always get this question in my comments, and the short answer to this is no. I've been credit card churning for nearly a decade now, and my current credit score with Equifax is 980, and with Experian it's 830, which both puts me in the excellent category. Most people who ask this question tend to not understand how credit scores even work. So let me share with you some insights based on my own personal experiences from opening and closing credit cards for the better part of 10 years. How your credit score is determined is based on 3 main factors: your repayment history, credit inquiries, and credit history, with each of them having different weightings towards your credit score. Making your monthly repayments on time and in full will help boost your credit score, whilst missed payments decreases it. A strong repayment history is crucial to achieving a high credit score because it makes up roughly 60% of your total credit score. Secondly, your inquiry frequency, or the recentness of your credit inquiries, can have an impact on your overall credit score as well. Every time you apply for a loan or credit, the financial institution will pull up your credit report to evaluate their risk profile to lend you money. This is what is called a hard inquiry. Each hard inquiry will negatively impact your credit score, whilst on the other hand, closing your credit card will actually increase your credit score, which is why I always close down my credit card before applying for a new one, because it helps offset the decrease that I'll receive from that hard inquiry. The good thing is that inquiries only make up around 30% of your overall credit score. Lastly, with your credit history, having an extended credit history with one credit card can look favorable for the bank. This shows them that you can properly manage your debts, and so I always like to have one credit card open at all times, which I call my keeper card. This is a card that I essentially never close, and this essentially shows lenders that I have a good track record of staying with one provider for a long period of time. And as an added benefit, I can use this credit card as a fallback when I'm in between churning credit cards. Any negative history like defaults or overdue payments will negatively impact your credit score here, but overall, this component only makes up around 10% of your credit score. How long should you wait to close a credit card after receiving your sign-up bonus? Another very common question that I get asked is, when should you cancel your card once you've received your sign-up bonus? Do you cancel it straight away? Wait another month, and should you apply for another card before you cancel this one? The general rule of thumb that I always have is that you should always cancel your card before signing up for another card. And the sooner a credit card is canceled, the sooner another application can be made for another credit card, which ultimately allows you to churn a greater number of credit cards throughout the year. If you're just starting out with credit card churning, then I would recommend to churn between 3 to 4 credit cards a year. So say you opened a new credit card in January, you'd want to wait a total of 3 months before opening your second card in April, and then another 3 months before opening another card in July, and then finally open your last card in November. This way you have the full 3 months to meet your spend criteria, so you don't have to overstretch yourself from a spending perspective. And once you receive your sign-up bonus, feel free to cancel the card immediately. Does the sign-up bonus expire if you close your credit card? Now, this depends on the sign-up bonus that you receive. If you're earning frequent flyer points like Qantas or Velocity, then no, the bonus points will not expire. However, it is important to note that your Qantas and Velocity points do expire if your account has been inactive for more than 3 years and you haven't earned any points in that period of time. Now, when it comes to sign-up bonuses that award you with bank-specific reward programs like American Express or Citibank, then yes, these points can expire. For example, with American Express, once you close your credit card and you don't have any remaining credit cards with American Express, then you have 30 business days to use your reward points or they'll expire. Each bank will have different terms, but generally they will allow you a period of time to actually spend your points before they expire after canceling your credit card. But my advice is to always spend all of your bank-specific reward points before you cancel the card. And that, guys, is everything that I had to share with you in today's video. If you've made it this far in the video, then thank you so much. Drop me a comment with the word travel down below so I know you've made it this far. And if you've enjoyed the video or learned anything new, then make sure to hit that like button down below because it really does help out the channel, and consider subscribing for more credit card related content in the future. Next, if you're interested in how you can actually book business class reward flights using credit card points, then you might want to check out this video right here.